Hello and welcome back to the course on digital payment. In this section, I will be talking about business model of the POS machine and its profitability. So let's get started right away. So the few of the business model which works in the POS industry is number one, where the POS machine seller or the acquiring entity or the acquirer bank actually charges a monthly fee for the rented POS plus a per transaction fee. Second model is the acquirer actually charges a one-time POS fee and then also a per transaction fee. And the third category is that the acquirer actually charges a one-time POS fee plus per transaction fee plus annual maintenance fee to provide a service like a troubleshooting and other trainings and all other kind of services. And then there is only per transaction fee where the merchant does not charge any monthly or an annual charge or a one-time fee. It just charges on a per transaction fee. And then there's a new kind of a business model where the acquirer is not charging you anything on a transaction fee, plus it is not charging any one-time fee. But then how do they earn money on this kind of a business model? They do a cross-selling. For example, getting the data of payments and then utilizing that to give loan to the merchant or to the customer which transact on that through that merchant. So these are few of the business model on which the industry operates. Definitely there could be different other models as well, but these are the mostly used business model. Now let's look at what is a profitability into the POS business. So the number one, it's called merchant discount rate. I'm sure that you remember what is a merchant discount rate. So on every transaction, the merchant has to pay a fee to accept the digital payment, which is called merchant discount rate. So on merchant discount rate, acquiring bank and the acquiring entity earn some amount of profit. Then the interchange fee. So interchange fee is the issuer revenue out of the merchant discount rate. And the interchange fee is set based on the merchant category code, the authorization, the processing, what kind of extra information do we need to authenticate a payment, or what kind of card is used at the POS. It could be a premium card, then the interchange fee will be higher. If it's a normal card, then it will be a regular fee. Then the acquirer bank actually earns on the current account float. So whenever a merchant accepts a payment, all in the entire settlement of that merchant happens into the current account of the acquirer bank. So each and every merchant is supposed to have a current account opened at the acquirer bank. So the acquirer bank actually earns on the current account float or the balance which merchant has with the acquirer bank, because in the current account the banks do not have to give any interest to the merchant, but the acquirer bank can enjoy this float or the current account balance which these merchants have maintained with the acquirer bank, and the acquirer bank can use it for further lending and for all other banking services. Then there are different costs involved into servicing the merchant. It totally depends on the business strategy the acquirer has, whether it wants to create a high touch model or a technology heavy model or a people intensive model, what kind of business strategy it has, what kind of relationship it wants to maintain with the merchant, and what is the size of a merchant. So if a merchant has a bigger size, definitely a acquiring bank would like to give more um, focus to that merchant. So it totally depends. So the cost depends on the type of business and other business rules. Then there's a scheme pricing. So scheme is like Visa, MasterCard, RuPay. These are called cards. So there are different parts of a card scheme fee. So let's look at few of them. Definitely there are many others. I will tell you about a link where you can go ahead and know more about what are the different components of the scheme fee. So the first type of fee is called an administrative fee, which the scheme charges to all the member banks who have agreed to be the member of that card scheme. So it's an administrative fee to cover the administrative cost of the card network. Then there's assessment fee, and this is a fee which is charged by scheme to use card brand for the merchant transaction. So it is charged as a percentage of the total transaction volume over the POS machine. However, bank and ATM transaction are not recorded into this assessment fee. Then there's authorization charge. So every time a transaction happens through the card scheme, it charges a fee to authorize that transaction and to process that transaction. So members are charged differently based on the tiered structure. So tiered structure is a slab. So if an entity belongs to or has done transaction on a certain slab, then they have to pay differently. So whatever is your tier on the basis of number of transaction or the volume of transaction, you have to pay a differential fee, authorization fee. And it is even charged for the business decline. So we'll talk about what is a business decline and technical decline. So the next type of charge is member audit charge, which a scheme charges to its member banks or to member entities to ensure that the technical standards and securities are being met and all the risk practices are being maintained as defined by the scheme network, because it is important to have a secured payments. So periodically they do an auditing of the banking system and to the issuer system. So there's a member audit charge which is already communicated to the members during the agreement phase, and at a periodic level the auditing happens and the members actually have to pay that fee. So the training fee is a fee which schemes charges to its member. The member could be a banking entity or a non-banking entity. So this training fee actually helps the staff of the banks or the non-bank entities to understand the system of the scheme, how to raise a chargeback, how to handle a refund process, how to process a batch transaction, how to dispute in case if they are not happy with the settlement, and also about the technical part of the scheme. How does it work and how do they have to log in and what are the things they have to manage into the system. The next charge is an arbitration or a compliance charge. It could be a cases in which issuer bank does not agree with an acquirer bank or acquirer bank does not agree with issuer bank on few transactions and there's a dispute. So dispute generally gets solved between the acquirer bank and issuer bank. In cases where the issues does not get resolved between its members and if the scheme has to pay any arbitration fee, then it recovers that cost from the related party. So the next charge is a retrieval request charge. If an issuer bank thinks that he wants more information about any transaction from the acquirer bank, it actually asks the scheme to get that information from the acquirer bank. In that case, acquirer bank passes on the information to the issuer, but then the scheme deducts some money from the issuer bank's account and then passes on to the acquirer bank to provide the extra information. It could happen in the case of a chargeback where the customer has gone ahead and raised a chargeback, but now the issuer bank wants to investigate it further and hence it needs more information from the acquirer bank than what the acquirer bank has given to the scheme and the scheme has passed on to the issuer. In those cases, there is a retrieval request charge which scheme charges from the issuer bank but then passes on that fee or the charge to the acquirer bank. Card scheme is a very complex business model, hence there are different parts and different components and nitty-gritties of this scheme pricing and different parts of this scheme fee. I want you to look at this blog and the website which has a very good information on digital payment, and it is cardfellow.com, and which is a blog. So you can go there and you can read more on what are different parts of the scheme fee and what are different digital payment systems. So it has explained it really well. So that's all on the business model and profitability of the POS machine. In the next section, we'll talk about the backend system and processes of a POS machine transaction. So till the time, think about POS machines and cards. Thank you.